Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Friday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So I know I've been kind of teasing this for a while, pretty much ever since I switched companies, but I wanted to do kind of an intro video on commercial lending. I'm going to start by giving some kind of basics to commercial lending, and then I'm going to talk about a specific loan program that applies really for multifamily. And I'll talk about what's unique about that program, where there could be some differences with other lenders. So in general, with commercial investing, it's based on kind of the same basic criteria as residential. You've got assets, debt to income, and credit score. The difference is on commercial lending, your credit score is less important than not having bankruptcies, foreclosures, things like that. Obviously, in the residential world, that is important as well. But if you have like a 660 credit score, even if you don't have those type of things, that's going to affect the interest rate and the terms quite a bit versus having like an 800 score. In the commercial space, as long as you don't have those major ticket items, you just have like maybe a high credit utilization, that's not going to be a major issue. Now, when it comes to assets, the down payment requirements are going to be higher for commercial. Now, there are ways you can partner with people, you can partner with the seller to lower that, and I'll get into that when I describe the specific loan scenario. But in general, you're looking at probably 25 to 30% down in most cases, versus for a primary residence as low as 0 to 3 to 5%. On the debt to income standpoint, it's much more similar to like a DSCR residential loan than with your conforming loans, conventional FHA, etc., where you're going off of the income of the property that you're buying in most cases, and it's compared to the debt on that property specifically. Again, it'll differ by products, but what I'm going to talk about mainly, that's the case. It's essentially just a DSCR loan, but at a higher dollar amount and higher unit number than a 2 to 4 unit property, which is considered residential. Another thing with commercial is there is a little more flexibility than in residential, where with an FHA loan, there are very detailed guidelines that every lender has to abide by. If you have a 579 credit score, you have to put 10% down. There's no give or take. That's how the FHA guidelines are expressly written. With commercial, there are a lot of things that are similar amongst lenders, but it is ultimately the lender's discretion. So you'll have things like preferences. Maybe one particular bank or credit union will prefer an investment in this particular area for whatever reason, like they're trying to build up their portfolio in this zip code, so they're willing to offer better terms. Things like that. There's more back and forth than there would be for residential. You might be able to get, in exchange for a higher interest rate, better terms for one particular aspect, which there's not really that give and take with residential. To be clear, we have access to over 700 different lenders in the commercial space at my company. So most of the times we're going to pick like 6 to 10 different lenders to start the process with. And really, we want to have 3 lender approvals before moving forward, just in case a lender decides to stop doing that particular loan, which can happen. Then at least you've got a couple different options. That said, let's talk about this specific lender. So this particular lender will go up to $5 million in loan amount. So there's no unit maximums. It's just whatever 5 million can get you. The minimum down payment for loans over $1 million is 30%. Under $1 million, it is 25%. Minimum credit score is 650 for this program. And if it's above a $500,000 loan, the minimum DSCR ratio is 1.2. So for easy math, if you're generating $1,200 a month in revenue and your monthly payment is $1,000, that would be a 1.2 ratio. Now, I think there is a little bit of flexibility there if you're just below that threshold and you have, really good credit, or you have reserves or putting a higher down payment, then that will probably work. But 1.2 is the stated minimum if it's a loan above $500,000. If it's below $500,000, there is no minimum DSCR ratio. So that's kind of the high level overview. Now I'm going to get a little more nitty gritty. So this loan program you can buy in an LLC or your personal name. I would definitely recommend doing anything commercial in an LLC, but you can do it in your personal name. And no matter what, the property is not reporting to your personal credit. That's very important to understand. Now, I mentioned minimum down payments of 30% if it's over $1 million, 25% if it's under. There's a maximum combined loan to value, or CLTV, of 90%, which means if you can get the seller to stay in the deal to some extent, you're putting 30% down. If the seller is willing to retain 20% of the property, finance that 20% to you, that is acceptable with this lender, because that 20% minus the 30% is 10%. That's the minimum skin in the game, so to speak. Another important thing to know is you do need to be an experienced investor to do this program. Now, the bar for that is not very high. If you have any rental property experience, that should qualify you. Now, if your past history is like you just bought a single family property that you're renting out and you're trying to buy a $4 million apartment building, that's going to be a little dicier. Not to say that you can't qualify, but there's going to be less wiggle room on a lot of the terms for something like that, versus if you've been doing it for a while, or maybe you have like an 8 unit and now you're moving up to a 25 or 30 unit, something like that. That would be a little easier for a lender to approve. But in any case, if you personally have experience and you partner with an investor who's willing to put up the money for the down payment, you can form an LLC and buy the property through that LLC. So that would be one way to acquire a property without putting any money down personally, if you can find an investor willing to do that. Then one last thing to mention that is very important with commercial is this particular program I'm talking about is a 30-year fixed loan. Now, in residential, that's kind of a given. However, in commercial, most of the time, you're looking at a short-term fixed period and then it adjusts. So there's a comfort of having a 30-year fixed in commercial that a lot of lenders do not offer. The other things to look into and consider when you're doing these loans is a lot of the times you'll have a prepayment penalty, and that will generally, the longer the prepayment penalty and the higher the penalty, then the better the terms are going to be, the better the interest rate. But understanding, basically that means that during that period you cannot pay off the loan or refinance the loan without incurring this penalty. So you want to make sure you're strategic about that and only doing a penalty that you are for sure not going to want to sell or refinance within that time frame. So hopefully that's helpful. Again, this is just one lender. By no means is this the end all be all, but I thought it'd be a good intro to commercial lending. But if you have any questions at all, feel free to comment below or call, text, or email me. But thanks for tuning into this video, and I'll see you next time.